you are going into qualify for this incentive so that we can begin to take the benefits early. So this is what the new tax regime is bringing on board. So you have the threshold, you have a sunset clause. This speaks to the duration for which this sector will be considered matured and the incentive will be removed. So it is no longer business as usual. So the government is going to be transparent. However, for every tax person that enjoys this incentive, there is an obligation to report, to file return on the benefits that is granted by the government to the taxpayer. The reason for this is at the end of the year, the government can be able to report that this is the much incentive that is given, and these are the sectors that benefited. So we'll begin to monitor how productive those sectors are in the economy. If the incentive are delivered, the purpose for which that incentive is created, I think this is the right way to go when we talk about tax expenditure management from the government side. So I quickly move to the next slide, which is capital allowance. This is an allowance that is given in lieu of depreciation. So for every capital asset that is acquired that qualify for such, you will benefit from this allowance. Before now, there is a restriction of 66 to third that a taxpayer can claim in any fiscal year, except for entities in manufacturing or agriculture. But going forward, under this Nigerian Tax Act, all entity shall claim 100% as capital allowance. And where there are disposals of assets, a taxpayer can report such as income and losses as the case may be. So it is no longer the case of balancing charge or balancing allowance that has gone with the old regime. So it is important that we take note of this. So the next is withholding tax. And I want us to look at withholding tax from two lenses, from the corporate lens and from the individual lens. The individual being an enterprise, and from the corporate lens, means company that is registered as a limited liability company. So withholding tax is not a type of tax. I want to put that record very straight. It's the payment of, it's an advance payment of tax rather. So, and the rate is determined by the nature of the transaction. Some transaction will attract 5%, some will be 10%, some will be 2%. So it depends on the nature of the transaction. But before withholding tax withholding tax is applicable, there must be contracts between the parties to that transaction. So and I will give us a very good clue here. Documentation is very important. And the way we document the same transaction can attract different rates. And I'll give you an example. I conducted a transaction, which is delivery of professional service, just like we are having this morning, to one entity. And I don't want to pay 5% as withholding tax. What did I do? In my narration, in my invoice, I wrote delivery of tax education, and that was all I did. The word delivery shows that I have supplied something, and contract of supply attract 2%. But if I have said professional services directly, it will be 5%. But it's the same service, but documented differently. So this is where you bring your professional expertise. And the difference is just 3%, you will say. But remember, this go a long way in terms of your cash availability, which is your cash flow, which you can use to expand your business. So just think about this. So this is what withholding tax is. So it's an advance payment of tax. So for instance, as an individual, I have an enterprise. I have conducted a transaction and they have deducted 2% of the total amount that is due me. So assuming 100 on the scale of 100, they've deducted 2%. So I got 98. Assuming I'm filing my tax and my tax liability comes to 50, I will not pay 50 anymore. I will pay 50 minus 2. So 48 is what is due to the government because I have paid an advance of 2%. That is what withholding tax is. And it is linked to personal income tax. Why for the purpose of corporate entity, it is linked to corporate income tax. I hope this is clear. I come to personal income tax. Personal income tax, we will look at this from 2 angles. So we look at enterprise and we look at individual in employment. So for individual in employment and enterprise, they are seen as one because a sole trader is viewed as one-man business. So the tax regime that the enterprise is obligated to is the state internal revenue service where that business is located, the place of residence. It's very important that we take cognizance of this. However, there is a tweak to the band rate. The band rate now range from 0% to 25%, which is the maximum. So if you earn a taxable income, I am choosing my word. Taxable income is income that is arrived at after the deduction of allowable reliefs. What are those reliefs? You have the rent relief allowance. You have the contribution to the pension. You have the contribution to National Health Insurance Scheme. And the interest that you paid on mortgage for owner-occupied house shall qualify for relief before arriving at taxable income. So if my taxable income is 800,000 naira per annum and below, I shall be taxed at 0%. This implies I will pay no tax.